Good afternoon and welcome to another episode of Financing Forward with the GDB, where we tell you what's happening with our products, services, updates, and key financial tips that we want to share with you. I am your host, Communications Officer Ria Murray, and I am joined today by none other than our credit manager, Mr. Donald Williams. So, welcome, Mr. Williams.
Thank you very much, Ria, and good afternoon to viewers, listeners, etc.
All right. So today the topic is student loans or education loan packages here at the Grenada Development Bank. And what I want to let you know is that we have three packages that we will be discussing and also letting you know some pertinent updates. So just to get the ball rolling, or before we get the ball rolling, just for those that are with us and viewing, you can comment your questions. We will see it and address them. So feel free to comment your questions that you have, and we will address them during this program. So, Mr. Williams, just to start off, why would you say the GDB is a great investment partner in terms of one's educational goals? And how did the GDB do the legwork in terms of developing the student loan packages that we have now?
Okay, well, in terms of GDB being a great investment partner, probably might even want to say the best investment partner
The best,
for
the
persons
best.
wanting to pursue tertiary studies. We have a very long history. Now, the Grenada Development Bank has been around for quite a while. And from the very inception of the bank, we have been involved in funding persons wanting to go on to tertiary studies through our student loan programs. In fact, for decades, the Grenada Development Bank was the only financial institution locally that had loans specially packaged for persons wanting to go on to study. So while you probably might have gotten funding to do studies from the other institution, in terms of something packaged specifically to fit the needs of persons going off to study, to do tertiary studies, the Grenada Development Bank has been the only one doing that for decades. And I still think we're the leader in that locally. So we have quite a lot of experience, and over the years, what we have done is use all that experience in terms of funding persons, feedback from persons who we have sent up to study, completed, etc., to sort of tailor and update our products. So yeah, I think that makes us probably the greatest partner when you're coming to looking for investment in your studies.
Right, and I'm sure in terms of the persons who have gone on to study through the GDB, it's very vast. It's very vast in terms of the different sectors that they would fall into.
Yes, certainly we have funded persons. We have funded persons across the spectrum when you look at the different sectors, etc. And it's not just for academic purposes, but we do the purely academic programs, we do the technical and vocational programs here. And in fact, we concentrate a lot on the technical and vocational and skills. But I must say the demand is mainly mostly for academic programs, but we have been encouraging persons to do the technical and the vocational. You do a lot of also the professional studies. We do quite a lot of the professional studies too. So persons wanting to go into things like project management, accounting, and those professional programs.
All right, that's great. Now, to get into the specifics of the different programs, I wanted to start off with our regular student loan here at the Grenada Development Bank. What does it offer and who is it designed for?
Okay, so the regular student loans, as we term it, probably is the product that had been around for the longest while, and it basically targets all persons who want to pursue tertiary education. Previously, a lot of it was persons going off full time and studies, but with the shifting dynamics in terms of a lot of online and other platforms that people can pursue their studies, we find that it is a mix now, right? And we finance anybody who can get accepted to pursue one of those programs, and of course could meet our criteria for funding, and all sectors, all areas of studies. What we do though, because we're a government, fully owned government financial institution, we sought to mirror government's priorities. So we look at government priority list of for areas of studies, and we would prioritize those. But it doesn't mean that if you want to pursue studies in an area that is not on the list, that we wouldn't do it. But those are where we would take our cue from government and prioritize those. And what we also try to encourage is, as much as possible, local and regional studies. And so because of that, we give priority to persons wanting to study local and regionally. However, we fund persons studying internationally. In fact, I think we have funded persons in North America, Europe, and beyond. Yeah, but the preference is for local and regional. And the main reason for that is that the local and regional studies, most times it turns out cheaper when you look at not just the cost of tuition, but in terms of your travel and your accommodation, etc. So what we would say is, look, if the program is not available in the region and you want to go extra regionally, we will support you. Or if for some reason you can't do it cheaper extra regionally, we would support you. And our programs fund 100%. And that 100% is the end, all the costs identified necessary to pursue the program. So the tuition, all the other fees, that the associated fees, your travel, and also your personal living expenses. Because the expectation is, or what normally happens is that you go off and study, but you have to live. You're a human being. So you have all your living expenses, not just accommodation and food, but all your living expenses. So once we can identify that those are needed expenses while you pursue the program, we would fund it and include it in the cost of the program, and we would fund 100%. So there is no need for a lot of persons call and they say, okay, well, how much do I have to deposit? No, you don't have to deposit anything. Of course, if you can contribute towards your studies and reduce the size of your loan, that is acceptable, but we don't require a deposit.
Okay, so I hope everyone is listening. You do not require a deposit to get an education loan here at the GDB. In terms of the regular student loan, what are some of the updates that you think you'd want to share with the public, looking at making it more accessible, easier to access funding for their education?
Okay, well, in terms of updates, and probably before we go into efforts to make it easier, just generally in terms of the genesis of our program and what had happened over the years. What you find happening is that the average cost of studies has increased exponentially, and therefore the average size of the loan request has increased significantly. So of course that would trigger some changes, some adjustments. But prior to that, what we would have done is to our collateral requirements were pretty lenient. But we ran into some issues, and as I said, over the years, we had to tweak based on experience. So we ran into some issues with high delinquency. And the main reason for this is you have a lot of persons going off and study, but you finish studies and you're back, but your life is not on hold. So persons start their professional life, persons start building homes, you're married, you have family, etc., but you still have a student loan. And what we found is this. Now, of course, if you buy the car, you buy the house, etc., those are tangible items that persons could repossess, could foreclose on you. With the student loans, we can't take back what we give you. But a lot of persons don't understand that that is the foundation that now allows you to gain all the other things. But we noticed over the years that this repayment of the student loan has not been prioritized. So those other things were given priority. So we had to look at what can we do to reduce the delinquency, because the thing is, as a small institution, if you have to continue to provide those needed services, you have to be viable.
Right.
If you have to be viable, you have to ensure that your loans are repaid. So we had to look at how do we deal with the issue of high delinquency, and therefore we started looking at our collateral requirements. So now we require that our loans are fully secured, right? But even with that, we are pretty flexible. So we look at each application on its own merits. And while we require that all our loans are fully secured, we're pretty flexible. So we would make decisions at the time, because we always look into see. Now our approach is, a student or anybody come to us looking for funding, our approach is always, how can we make this loan? So it's not about looking at the reasons why you don't qualify, but it's looking at how can we make this loan. So when you take it from that approach, you're very flexible, and you work with the person to take it at a stage where we can actually fund them.
All right, so that's good information to note in terms of how we have evolved. So, just back to the updates for the regular student loan. Anything you'd want to share that's
Okay, so
new?
right. So one of the things we have done, Ria, is that we had upper limits in terms of the maximum loan amount that we would do for particular programs. Yeah,
Right.
and a lot of that was tied to our funding arrangement because persons may know we borrow monies to lend. So, and one of our main finance over the years was the Caribbean Development Bank, and their loan agreements would have set certain criteria, and what they had was loan limits in terms of the maximum loan you can give to one person to pursue different types of studies. What we have done in recent times is to not totally ignore the limit, but we're no longer bound by that limit. So there isn't a limit per se. So we wouldn't say to you, look, the maximum student loan you can get is 150 or 200. But we would look at the application, we'd look at the costing, and we look at all the other elements surrounding it and make a decision. So that's one of the things we've done is remove that upper limit where we say, look, that's the maximum you can get. And that has made it a lot easier. Over the years, we have also been able to adjust our interest rates. Now, the interest rate is very important because when we underwrite the student loans, what we do is that we give persons a grace period. And that grace period covers the entire period of study. And in addition to that, we have a first 3 months after you would have graduated, etc. You have an extra 3 months within which time you can look for employment. If you're not gainfully employed within that 3 months, we can extend to another 3 months. So you get the entire period of study and a maximum of 6 extra months as a grace period. Now, during that grace period, 2 things can happen. One is that you can make the interest payment. So you pay the interest accruing on the loan during that period, and the interest is charged on the balance of the loan outstanding from time to time. So as you draw up, it goes up, and as you start paying, it goes back down. Yeah. So that's the first option. You also have the option where we can accrue the interest during the period, but it's not payable until you complete. And then when you finish, you have the option of either paying it off in a lump sum, or we can capitalize it, meaning that we add it onto the loan and restructure the loan. Now, that is important because what you find is that persons going off full-time and studying most times don't have an income, and therefore they can't pay. Now, or you may have a family member who opt to assist you. But if you ask them to pay the full loan amount, it might not be affordable because, of course, they have their other commitments. So they would make your interest payments. Now, if our rates are falling, it means the rates would convert into a lower dollar figure to be paid monthly. And therefore, it is more affordable for persons who would come on and assist you in terms of making your interest payment. But not only that, if you allow it to accrue during the period and you have to add it onto the loan at the end, imagine you have a study period of 3 to 4 years. That's 4 years interest. And if the loan size is increasing, you have the interest amount will be a lot more. And therefore, you will find at the end, your loan burden could sometimes double, depending on how long the grace period is. So with lower interest, the amounts of accrued interest would now be lower and make it more affordable. So one of the things we'll be looking at is how can we reduce the interest rates? Of course, we have our limitations. And one of the main limitations we have is the fact that we borrow money to lend. So if you, for example, we borrow from the Caribbean Development Bank, but in recent times, their rates have been increasing. Yeah? Now, if the rates at which you're borrowing are increasing, you might be forced to increase your rates too. But we try most of the time not to pass on the increase to the end users. So the 2 main initiatives that we've been trying to do to make it much easier is one, removing the upper limit. So we have a set upper limit. Of course, it doesn't mean that any amount you come and ask for, you'll get. We do the assessment, etc. But we do remove that upper limit, and at the same time, we try to reduce the rates. Now, I mentioned earlier the issue of the collateral and the fact that over the years we have had to require collateral to deal with the issue of loan delinquency. But what we've been doing in recent times, while we still require the collateral, we've become much more flexible. so that we have loans where probably we may not give over a certain amount unsecured. We can now consider a lot more than that, and there have cases where we have given loans in excess of 100,000 or more unsecured. But it means that you would want to look at it in its entirety and ensure that even though you don't have collateral, the other areas are pretty comfortable and you feel that is a risk that you can take. Yeah. So we look at it again, as I said, each one on its own merit, and we make a decision, but our approach is always, what can we do to assist you? How can we make the loan? So we're very flexible. So I don't want persons to say, okay, well, they require collateral and I don't have it, so I'm not going. Speak to us. We'll work with you and see how we can find a way to fund you.
All right, thank you for that. And that's the regular student loan. So now I'm going to the second education loan product here at the Grenada Development Bank, and it's called the special student loan. So, Mr. Williams, if we can just go into the special student loan, how it differs from the regular and its impact in terms of assisting those who may be in a more vulnerable position in terms of getting them to tertiary education.
Yeah. Okay. So the special student loan is an initiative undertaken by the Grenada Development Bank in collaboration with the government of Grenada and the Caribbean Development Bank. So the program was initially funded with a loan, soft-term loan from the Caribbean Development Bank, and after that funds were exhausted, government would have put in a certain amount of that. And the program, as it says, is a special student loan program. And we normally refer to it, or a lot of persons refer to it as the Poor and Vulnerable Student Loan Program, but it's really the Special Student Loan Program. Why we call it Poor and Vulnerable? Because what we try to do is to target persons who are not at the level where they can easily access funding, right, from our regular student loans. So persons who are a bit unfortunate in the situation, persons who are considered to be in vulnerable groups, etc., that is tailored specifically to provide funding for them. The characteristics, for example, the first thing is that we remove the collateral requirements. So for the loans under that program, there is no collateral requirement. So you don't have to provide a mortgage or anything like that, except that we require one guarantor. But even with that program, the purpose of the guarantee and the way we assess the guarantee differs from what you would normally do. So normally, if you ask for a guarantee on a loan, you would want to do an assessment of the person to make sure that they have a certain amount of net worth and that they have the ability to service the debt if they're called on. In this particular case, that is not the purpose of the guarantor. So even though we still refer to them as a guarantor, really is a second person on the loan who we can engage with if needs be. So you have a student, you fund the student goes out and study. You may find at any particular time you need to engage somebody to deal with the facility. Now, if there is nobody joint on the loan, you're not authorized to deal with anybody else on the account. You can discuss it, you can provide information, etc. But you may not be in contact with the person. Or sometimes they're gone off, they finish their studies, and you're not able to show up their location. So that the purpose of this guarantor is a second person who you can engage. So we don't do the assessment and see what's the net worth, what's that, because that is not the intention. There's no expectation that they would have to repay the loan. And that is just for the special student loan, because the whole intention is to make it a lot easier. Because sometimes you say to the person, you need to get a guarantor, but nobody is prepared to guarantee a loan for you, because it means they're also effectively taking the loan along with you, and they have the same responsibility. And a lot of times people are reluctant to do that. So we don't want to put you in a position where you can't find a guarantor. And then if you're talking about persons from poor and vulnerable household, and if you're going to stick to the same criteria that you normally look at for a guarantor, then obviously nobody from the household will qualify. But in this case, because as I said, is just to have a second person that you can engage with as need be, then you could use the parent or somebody from the household, even though they themselves doesn't bring much to the table. Yeah. So that is one of the things with the now, of course, there are certain criteria in terms of how you qualify and who qualifies. Right. Yeah. While I wouldn't get into specifics in terms of the criteria, but I will tell you, it looks at things like family assets. What is the asset base of the family? It looks at geographical location. So, for example, persons who are from particular locations in Grenada that is characterized by high poverty. Yeah, it looked at persons in terms of the dependency ratio in the household income. So those are the things you look at to determine whether someone would qualify for that special loan. In terms of the process, you engage the bank and you express your interest for funding under the program. And what we would do is we would refer you to the Department of Social Services. They would do an initial investigation, including they may visit the home, etc., and they give us a report. And that report would tell us if the person meets the conditions for somebody who would qualify for funding under that program. Then what we do internally, based on the report from the social services, we then prepare a full credit appraisal, yeah? And that goes to a committee. So the program has this independent committee. It's an external committee put together by government with the manager of the bank sitting on that committee. And it goes to that committee, and the committee does the review. We call them the Student Loans Advisory Committee. We commonly refer to them as the SLAC. And that advisory committee would now review what we sent to them. And they would make a determination and say, yes, this person meets all the conditions. You can proceed to fund them under the program.
Right. And with the special student loan, are there any updates that you would want to share? Just maybe one or two.
Not necessarily any specific updates, but we have had some adjustments in the interest rates. So when the program started, I said initially it was funded by the Caribbean Development Bank. The interest rate was such that you paid 5% during the program of study, and then upon completion, the rate increased to 7%. Then about a year, 2, 3 years down into the program, we changed that and we give you one flat rate, so it was 5%. But after we would have exhausted the funding from the Caribbean Development Bank, and the government gave us some funds injection into the program, we reduced the rate to 4%. So the rate on that now is currently at 4%. Yeah, and that 4% is probably I don't know if you call it a very good rate, yeah, for somebody to get to pursue studies. So that is mainly the main development in terms of the change in the rate. Yeah.
All right. And just moving along in the discussion, so we looked at the regular student loan. Just to simplify it, the regular student loan, you would have collateral requirements. For the special student loan, the collateral requirement is removed, but there are special conditions. And now we move to the work-study loan. So tell us a little bit more about that product, that special product.
Yeah, the work-study loan product is an interesting product. And while generally the average loan size is smaller than the other two products, I think it's probably becoming one of our most popular loan products. Now, with the changing landscape in terms of persons' ability to pursue studies online, remote, etc., a lot of persons choose to remain on the job and study. But even then, you find your cash flows don't allow you to meet the payments when they're due. So what we've done, we've looked at is like, how can we work with persons who are full-time employed and want to remain in employment and pursue studies? So we came up with that program, and what it does is target persons who you're employed, you have been in employment for a while, and you want to pursue your studies, you want to enhance your certification, etc. I must say though that it doesn't matter whether the program you want to pursue is in keeping with your existing employment or whether it's a new undertaking altogether, because persons may probably be looking at maybe a change of career, etc. But once you're gainfully employed and you're looking to pursue studies, that program suits you. And what we do is that that loan, the first, I think, is about $25,000, is no collateral requirements. All we require is a deduction, a salary deduction. So you apply to the education institution, you get accepted, you get your costing, etc., and you come to us and you say, look, I would like to pursue those studies. And we will fund you. We require you to give us a deduction of salary, monthly deduction, so therefore the payment of the loan. Of course, because you're continuing your full-time employment and you're not going off and study, your income is not interrupted. And therefore, we expect you to commence repayment immediately, right? Now, when we started that program, it was primarily for the person employed and wanting to pursue studies. But what we realized is that we've been having requests from persons say, look, I have a brother, I have a daughter, etc., who want to go off and do some level of studies full time, but they don't have gainful employment. Can I use the same program to fund them? So we've tweaked it a bit, and we're now saying you can use it to fund for yourself as well as for spouse, siblings, or children. Yeah? So you can come say, look, I'm gainfully employed, but I have a daughter or brother, spouse that wants to pursue this program. I want to assist them. And we would give you the loan, but it's for funding them. And the same principle apply. And the first $25,000 unsecured, between that up to $50,000, we still wouldn't require any material collateral, but we'd access for 2 guarantors. So persons who will just join and sign on your behalf as guarantors. So in case, unfortunately, you demise or you can't pay or something like that, we can call on them. Anything in excess of 50,000, you would need to provide us some collateral. Yeah, so that's basically our work study program. And as I said, it's for all programs of studies.
All right. So as you heard, the products that the Grenada Development Bank has, they're diverse and they give everyone an opportunity to pursue tertiary education. Just moving along, in terms of persons thinking of the process, applying for an education loan here at the GDB, what are some of the documents, the information that they can start gathering?
Okay, so first and foremost, persons need to apply and get acceptance. Yeah. So we would require that you have an acceptance from the institution where you want to pursue the studies or with whom you want to pursue the studies. Sometimes you have situations where persons say to you, but in order for me to get the acceptance, I need to show that I have the funding. So in that case, we can make an exception, but what we would look at is some level of correspondence between yourself and the institution, so that we would be able to determine that, look, based on those correspondence, you would most likely be accepted. However, you just need to get the funding. And we can use that to see how we can get the approval for you. But ideally, we want to know that you have the acceptance to at least for the program. Now, once you have the acceptance, the next very important thing is the costing. So it's important that you have the estimates provided by the school, for tuition and all the other associated fees. For persons wanting to go full-time, we also ask to get estimates for things like living expenses. Now, a lot of times persons say, well, how do you expect me to know how much it's going to cost me? Yeah. So what we do, we look at some of the schools have on-campus accommodation. We use the cost for those. Where they don't have, the schools normally give you estimates as to what kind of cost that they would have associated with their accommodation. And we would use those estimates. So we get the school fees and estimates supported by the school saying, look, this is what it on average it would cost somebody to live maybe for a month, a year, etc. Because one of the things we want to do is to make sure that we have an appreciation of the full cost of the program. Because one of the things we don't want to do is to send you out there and halfway through, 3/4 way through the program, you can't complete. Now, there is always the option of looking at additional loan, but there's no guarantee because there are a number of factors that can contribute to probably you not getting an additional loan. But as always in funding, it's just as if you're funding a project or any other undertaking, you want an appreciation upfront of what is the real cost. Yeah. So we would ask persons to get those costings, and then once you get those costings, of course, in case of the regular student loans or other student where you need a collateral, we would say, what is the collateral that you're offering us? So if you're using real property, you need to get the title deed to the property and of course a valuation. We have a list of appraisers that we approved appraisers. You can get it on our website or you contact us and we will give you, and you use any one of them to do an appraisal and evaluation of the property. So at that, you're coming with that together with the title deed, or maybe a copy of the title deed, because there might be reasons why you don't have the original at the time, a copy of the title deed, etc. And that is the start. We also require, especially for the regular loans, we require life insurance. The persons who have life insurance, you can come in with the life insurance. If you don't have, what we'd ask you to do is to make efforts to get one, but we can work with you to make sure that you do that. In fact, while we require the life insurance, and normally we would want to make sure that you have it prior to our disbursement. A lot of times, because we work with young persons, and sometimes that's the first application for life insurance and it's taking the time. Once we get an undertaking from the company that the policy has been approved, because from approval to actual issuance of the policy is going to take some time. We would use that information to proceed to accommodate you, and we wait until the policy is issued, and then we do the assignment. So, as I said from the start, we have a lot of flexibility in the process. So if you ask me, what I would say to persons you're interested, contact the bank. We would guide you through. Yeah, so you don't have to feel, some persons feel sort of overwhelmed by the process, especially if you pick up a brochure and you see some things and you're not too sure where to start. The easiest way to start, contact the bank. We have persons dedicated to work with you. They would guide you through, and take you to the stage where you're ready to complete the applications, and we'll take it from there.
All right, thank you. And on that note, that brings us to the end of our third episode of Financing Forward with the GDB. We discussed a lot today about our student loan packages, and it was my pleasure to have our credit manager, Mr. Donald Williams, with us today, and very, very, very thorough, taking us through the student loan packages, where you need to start. As he said, you could just start by contacting the GDB 440-2382. We also have WhatsApp 405-3242, and ask how you can qualify for one of our student loan packages. Again, we will be back next Wednesday with our fourth episode. I can tell you it's going to be about our small business program, and also based on our creative fund. And through that fund, we have a loan, we have grants, we have vouchers. So you'll be hearing about that next week, Wednesday at 2 p.m. So we look forward to you joining us. Please share with your family, share with your friends, share on your social media, tell them about this program, and take the leap of faith with the Grenada Development Bank, and you can get funding for your future, the investment in your education. I am your host once again, Ria Marie, the Communications Officer of the Grenada Development Bank, thanking you for joining us, and see you next time.